Hello, my name is Troy White. I'm a portfolio manager with Hoodoo Financial. Today I want to talk about real estate investing and real estate developing. And the reason being is that a lot of clients and potential clients that I interact with there's a familiar theme, and that theme is a fear and confusion around real estate investing, yet there is an intense desire to become a real estate developer and a real estate investor. So that's kind of, they are similar but not necessarily the same, but we're just going to dive in and talk about them. So we're going to talk about the various steps and in the order in which I'm just going to lay it out to you. So first off, it's practically impossible to be a real estate investor or developer without having real estate and investment training or knowledge. And there's plenty for you to read on the internet and the libraries. However, I recommend taking a real estate investment course or some sort of program that is laid out in a manner to help you achieve your goal. So you need to find the right one that solves your need, where you're lacking at, basically. And I'll run down some of the tools that we offer, some of the courses that we have. But that's just off the bat. You can't get it done if you don't know what you're doing. So, you'll just be throwing money out the window, so to say. And there's other ways to invest in real estate without, you can invest in REITs, which I'll dive into. I'm not even going to talk about that. And this is not what most people are talking about. They're talking about having hands-on and being the person that develops a property and reaps the rewards from doing so. So real estate knowledge and education, and you cannot have real estate knowledge without having some sort of investment knowledge, general understanding of investments. All right, moving on. Fundamentally, for you to be able to get in, most people are going to say, well, I don't have the money. So obviously it's going to require some level of credit, and credit it's a package there. You're going to have to understand leverage. Leverage involves using your credit, but it's not just about credit. So leveraging involves your credit and your income and the various ratios that underwriters are going to use to identify whether you are a good bet for them. So you're going to have to improve your credit so that you will improve your ability to leverage. And so that here's some things that are involved with that. Your debt to income ratios. So this is wrapped into a fundamentally understanding what the ratio analysis that take place in real estate are. And so debt to income ratio is part of that. Your credit score is part of that. Your income level is part of that, and your income sources are part of that. So there's no cutoff on either one. It's the combination of them all. So if you're lacking in the credit area, then you're going to need more income. And if you're lacking if you have a lot of debt, then you're going to need more credit and more income. So and then there are other ratios in the analysis that may pertain to the property that you're trying to get. But all these things are important because you may have to team up with someone else to cover your weak areas. Where you're weak, maybe you get a partner that's stronger in another area. And then remember that even in partnerships, that's partnership on that property. You don't have to think of it like, oh, I'm gonna be tied to this person on every investment that I do. No, every investment might have a different partner. You know, and some investments may not have a partner. All right, move on. You need to understand how to utilize LTV, loan to value. This is very important because the property that you have now or don't have, or the property that you're trying to acquire, maybe your personal residence, there's a level of equity to the value that the property appraises as. And that equity is what we're going to need to utilize as over and over and over and over. So as you acquire properties, you're going to build equity in these properties. Assuming we leverage these, we getting these on credit, we're getting loans to acquire properties. Well, as your tenants pay their rent, then you're paying the loans. And as you pay the loans, part of those loans is the principal value. As you pay down the principal, you raise up your equity. So the tenants are buying these properties for you. So as you increase equity, we need to utilize equity to acquire more properties. So that's how it works. It's not that you got to keep building up bank in your pocket. It's that as well, but it's also money is being or equity is growing as you pay down your loan. So we need to utilize this in the form of a refi or a HELOC. A HELOC is a home equity line of credit. So these are ways to gain access to the money that's in the walls of the building. You cannot acquire the money unless you take it out in the form of a loan or you sell the building. But in this conversation, we're talking about keeping what we get. So you have to access the money in the wall. The way you do that is by refinancing the loan and tapping into the equity or getting a HELOC, home equity line of credit. And that is what we're going to use as the down payment on another property. Also, understand and back to the education and knowledge portion, you're going to need to understand retirement accounts. And one negative that happens in our economy is that, especially with the type of clients that I see a lot, is that we utilize your retirement account, your 401k at your job, and use that basically as a unemployment account. You lose your job, then you're instantly in fear of never getting another job, so you cash out that 401k and you kick back a little bit, maybe go on a little bit of vacation to soothe your mind, then get back to work. Well, that's very bad. So we need to stop doing that, because you can tap into your 401ks, your IRAs, pensions, and in the way that we do that is by getting a loan against your assets, a loan from your 401k. And in that regard, you're getting a loan from yourself. So you pay yourself back with interest. So you are actually making yourself get better returns in your own account. At the same time, you're utilizing those assets to purchase more property. And also, you can roll over these retirement accounts into self-directed IRA accounts, self-directed 401k accounts. Those are accounts that allow you to hold alternative assets, including real estate. And primarily real estate is what self-directed IRAs are used for. We do a lot of amazing things with those. And in some of my other videos, I discussed those in pretty in detail. So moving on. Now, back to the knowledge base, the knowledge is going to give you some of the strategies that are available to you to utilize some of these tools that I just mentioned, the ability to leverage, utilizing the equity in your properties and your retirement accounts. Well, what are we going to do with it? Well, you're going to use various strategies that are particular to real estate. And some of them are to build up your experience, build up your cash, and here, let me list them, and then do more than that. So starting off with wholesaling. Wholesaling is basically being a middleman in an investment transaction that involves real estate. So you have to access buyers that are investors, and you are accessing sellers who have properties that are in some sort of need to, they are undervalued currently, or they are distressed properties or distressed owners is what you're looking for. And then you're looking for cash buyers and real estate investors. And there are methods to do both of those. And you stand in the middle. You just did the work, you uncovered a deal, and you know folks in search of deals. So you're being the person in between, and you're slicing off a piece for yourself. That piece is in the form of a fee. And so this is a good way to make $5,000, $10,000, $50,000 at a time, which again builds up your nest egg so that you can have more in turn when it's time to make a down payment on a property that you're going to keep for yourself. Now, get into the keep for yourself. Now, understand also the wholesaling, the investor could be you. So you could be the wholesaler, and there may be several investors that you're trying to shop this deal to, but one of those investors might be you. How so? Well, one of the strategies that you're going to be involved in as a real estate investor or real estate developer or real estate developer is a fix and flip strategy. That is, you acquire the property, you fix it up, and you flip it, meaning sell it to someone else at a higher amount than what you got it for. So in that value, in that scenario, there are back to the ratio analysis that we're going to have to do. We really need to be tuned into the ratios, because you need to acquire the property at one level, inject value into the property to another level. So acquire it for an amount that's here, inject value that is 30% higher than what you purchased it for, and then go out and get financing from a traditional lender and flip, and then that will allow you to get 100% financing fundamentally. Or you would just flip it to someone who will buy it for that amount above what you acquired it for. Now, when I was giving you the scenario, acquiring traditional financing that's 30% higher than the value that you bought it, and that's because if you want to buy and hold this property, then you're flipping it to yourself, back to the wholesaler person. You could be the person who is wholesaling it to yourself for this. So you started off as the wholesaler. You'll dump it if you can, but you couldn't dump it at the price you wanted, and you see there's value in there. So it moves down. It's going to be a fix and flip. So you try to fix it and flip it, and then you notice, oh, I've injected more than 30% value in this. So then you can get a traditional lender to refinance the property, flip it to yourself. Now you're buying and holding it. So holding it at that point. And the reason is because the traditional lender will give you 70% LTV on this investment property. So that's why you needed to inject 30% value into it, meaning you needed to make it 30% worth 30% more than what you bought it for. So that when they'll give you the financing for that 70%, which is 100% of what you got it for. That's 100% financing right there. Now, where else? We can do this same thing with hard money lenders and private money lenders. Back up to where I was talking, retirement accounts. Private lenders basically are people who have self-directed IRA accounts, and they trying to make a good return inside their IRA without doing all this fixing and flipping. So they'll just lend you the money at 12%, and they'll just do it interest only. You know, you just paying them their interest. They done made their money. Now when you flip it, you're gonna pay back the principal. All is well. So those private lenders and hard money lenders do those type of transactions for real estate investors like you. So also, you're going to have to understand the cycle of assets. Back to the knowledge. The cycle of assets in regards to real estate investing is stocks, bonds, mutual funds, ETFs. So all the money that you make needs to be invested. And that needs to be invested in appreciable assets. And so those appreciable assets is stock market assets. So that's why I said you need to understand not just real estate knowledge, but investment education as well. So those monies that you're investing in the stock market, and as they accrue, and as they appreciate, and you needed X amount to invest in a real estate venture that you want. So until you do that, you need your money working for you. So it will be investing in stock market assets. Then you've identified your deal. Then if you invest into a down payment, take some of those assets, use them as a down payment. And so now that's what I'm saying. The cycle of assets goes from the stock market assets into the real estate asset. Okay, now it's real estate. Now what you gonna do with it? The only reason you invest in real estate is so it will appreciate just like the stock market did, or cash flow. So that's what I'm telling you is the purpose for cash flow. So that's the buy and hold strategy. All the other strategies are just to make you more money, of which you would put into the stock market. And then as those accumulate, you buy more real estate. So as the real estate is kicking off rental income to you, that's in the form of cash. So the cash is invested in the stock market. As your stock market assets appreciate, you swipe off some of that and put it into real estate. Real estate kicks off income for you. You put some of that into the stock market. That's the cycle of assets. Now, how are you gonna pull all this off? Well, you need the knowledge, as I mentioned, and you need the tools. Some of the tools I'm gonna mention too. You need deal analyzer. How do I know whether this is a good real estate deal or not, right? It's one thing to invest in the stock market, but it's a whole other thing to invest in real estate. So you need the ability to identify the deal. What is a good deal and what's not a good deal? Back to the ratio analysis. It is heavily part of the deal analysis, deal analyzers. There are deal analyzer tools on the internet for you to utilize. Comps. You need to be able to compare what this dilapidated property that you just acquired, what could it be? I need something to compare it to. So you need a comp tool. You need to be able to or just do it yourself. If you know how to do it, just go and compare. You're comparing similar properties. Like you want to compare apples to apples, not apples to oranges. And so that means the same market, the same square footage, the similar property style and all that. So you need to be able to use comps. And then you need a repair estimator. So if I found as I'm analyzing the deal, how am I going to know what the after repair value is going to be? That's an important term to understand. ARV, after repair value. That's one of the key metrics that we have to identify. So the only way to know that is to know what it's going to cost me to repair it. So the value after I repair it is, I'm going to compare that to the value that it is when I acquired it, and then the cost to bring it to that after repair value, and then that's what I'm gonna sell it as. And the space in the middle is the money that goes in my pocket. So the deal analysis, the comps, the repair estimators, and then I mentioned to you, you got to find these sellers and these buyers, right? So that means you're going to need the lists, and there's various lists. There's a lot of different lists that these people are on, and it's ways that list builders find these lists for you to go after. So then once I got the list, I got a list of all these people with these distressed properties. I got a list of all the particular investors who invest in the type of properties that I'm interested in. Okay, I know where they're at. Now what I'm gonna do? I'm gonna call them up and say, hey, I'm just a dude that wants to do something, and can you hook me up? No, it don't work like that. So then you're gonna need templates, right? And scripts. And it's like, what do I say to them? And then when I send you need to send them letters and introduce who you are. And embedded in that means I'm telling you, this is to become a real estate investor or developer is a business. This is not just willy-nilly. So you need to have these templates that you're sending out on a regular basis, because you're searching for needles in a haystack. So we're sending out a lot of mailers to find these people, and emails, and making phone calls. So you need the templates that are proven to find these type of people and connect these one hand to the other. So that's, in a nutshell, that's all you need, really. That's a lot, but that's all you need. And so in saying that, our firm, Hoodoo Financial, has a course. The course is titled 40 Units and a Mule. And this is a real estate investing program. Actually, it's not just a course. A course, it comes with it. I mean, and that's the educational component. So all the things I just mentioned is what we created this invest in real estate investing program for. It provides you with the education, the foundation that's based on this cycle of assets. We don't just tell you about real estate. We tell you about, if you don't have the money yet, we need to build the money, right? So we're going to have to invest it in the market. When we give you the accounts, we actually have the platform for you to invest in stocks, bonds, mutual funds, in retirement accounts, non-retirement accounts, and self-directed IRAs, 401ks as well. And that's part of the cycle of assets, solving that issue. And the knowledge we've got. There's a long list of lessons that accompany this program that are there for you to watch videos, and there's some download worksheets and reading material as well. And we have the tools. We have the complete set of real estate investing tools that are used for anyone who is going to engage in real estate development and real estate investing. So that includes the deal analyzer, the comp tools, the repair estimators, the templates, email templates, the email lists as well. And I may include a list in the notes of this, wherever you see this video, but it's too long for me to just rattle it all off right now. That what comes with this, the tools that come with this investing program. But fundamentally, this program is designed to help you create your own real estate investing company, and that is, and what we're saying is acquire your 40 acres, get back your 40 acres. But today, it's not about 40 acres, it's acquire 40 units of real estate investment property. And the mule aspect is a multi-asset, unique, legacy-based entrepreneurial portfolio. So 40 units is and a mule is the name of our investment program, our real estate investment program. I encourage you to check it out. Take a deep dive. We'll definitely get you into becoming a real estate investor. And I'm gonna cut it right there because my time is running out. If you're interested, click the link, go visit our go visit our site and look over the program. And also, we have deals for real estate investment clubs to invest in this program. Thanks for listening. Hope to talk to you soon.